Hello everyone, I'm happy to see you here once again. The educational series, has provided an informative and useful video about 7 types of insurance you simply must have. Here, we will try to cover all about 7 types of insurance you simply must have, including term life insurance, auto insurance, homeowners or renters insurance, health insurance, long-term disability insurance and umbrella policy and much more. For your kind information, this series has been made only for educational purpose. For any doubt, you can use the comment section. We will try our best. Let's get right to the topic without wasting any time. 7 types of insurance you simply must have. When you don't use your insurance, it can be a real pain to keep paying for it month after month. Don't be fooled into thinking that you're getting nothing for your money. The defensive side of your game plan here is just as important as the offensive side of your game plan, and insurance is just as important as your debt snowball. Insurance can be compared to a life jacket. When you don't need it, it's a nuisance, but when you do, you're grateful to have it. In this case, it's all about shifting responsibility for the risk. If you don't have insurance, you could find yourself in the midst of a financial disaster in the blink of an eye. The question is, how can you tell which types of insurance are worthwhile and which are pointless to invest in? There is no need to worry about anything. As a guide, the following are the 7 most important insurance. Term life insurance, auto insurance, homeowners or renters insurance, health insurance, long-term disability insurance, long-term care insurance, umbrella policy. 1. Long-term care insurance. There are numerous services covered by long-term care insurance, including nursing home care and assistance with daily activities like bathing, grooming, and eating. Typically, long-term care refers to those who have a long-term medical condition or disability and require constant assistance. If it sounds pricey, it's for a good reason. It's also worth noting that Medicare doesn't typically cover long-term care costs. Who, then, is in need of long-term care? When you reach the age of 60, you should consider purchasing long-term care insurance in order to protect your retirement savings from being drained. You should keep in mind that even though you may not need long-term care before then, there are a lot of factors that influence your decision to buy long-term care insurance, and how much you'll have to pay for it, to consider. As a result, speaking with an endorsed local provider like a Ramsey trusted professional about long-term care options is critical. In addition, even if you aren't quite there yet, your parents may be. Talk to your loved ones about their long-term care options as well. 2. Health insurance. This type of insurance is a must-have for everyone. The availability of healthcare services is ensured by health insurance. About 67% of people who declare bankruptcy do so because they are underwater in medical debt, according to a study conducted by academics. To tell the truth, a lack of health insurance leaves you vulnerable to financial ruin. A single unanticipated medical emergency could result in medical bills totaling hundreds of thousands of dollars. Keep yourself out of that situation by having health insurance. Medical insurance costs can be prohibitively expensive, even if you don't see a doctor very often. A high-deductible health insurance plan can help you save money on your monthly premiums. In order to save money, you'll have to cover more of your medical expenses up front, but your premium will be lower each month. It's also eligible for a health savings account, HSA, which is tax-advantaged savings account used to pay for medical expenses. Savings on taxes. Contributions to an HSA can be deducted from your gross income or the income from your business. Individuals can deduct $1,400 in 2022, while families can deduct $2,800. Tax-free growth. When you contribute money to your health savings account, HSA, the money grows tax-free and can be accessed at any time. Tax-free withdrawal. Qualified medical expenses, such as health insurance deductibles, vision and dental care, are eligible for tax-free reimbursement with this money. Health savings accounts, HSAs, and high-deductible health plans with HSAs are now options offered by some insurance companies. To see if you can save money, consider looking into high-deductible insurance plans. There are a variety of high-deductible health plans that can be paired with an HSA. An independent insurance agent can help you sort through these options. 3. Auto insurance. Not only is it against the law, but if you get into a fender bender, the costs can be astronomical. Car insurance claims cost an average of $1,057, according to the Insurance Information Institute. Just think about how much you'd have to fork over if you had to. Because you have a variety of options for auto insurance, there's no reason to forego coverage. Auto insurance policies come in a wide variety of forms. Liability coverage. If you cause an accident, your liability insurance will cover the costs of any injuries or property damage that result from the collision. Check with your insurance agent to determine how much coverage you need, as most states require a basic minimum. Collision coverage. If your car is totaled or damaged in an accident, this insurance will pay to repair or replace it. Comprehensive coverage. Theft, vandalism, flood, fire, and hail are all covered under this type of insurance policy. Talk to an insurance agent to help you figure out what kind of insurance coverage you need for your vehicle and get the best deal possible. 4. Homeowners or renters insurance. Homeowners or renters insurance is a good idea regardless of whether you own or rent your home. Assuming you already have a homeowner's policy, double-check to see if it includes something called extended dwelling coverage. In addition to your policy limits, this type of coverage provides additional protection. Here's the thing with extended dwelling coverage. Even if the cost of rebuilding or replacing your property exceeds your insurance policy's coverage, the insurance company will do so. Unless you choose more coverage, they will only pay out up to a certain percentage, usually 20 to 25%, over what you've insured yourself for. Keep in mind that the higher the value of your home, the greater the requirement for additional home coverage. You should always check with your agent before purchasing homeowners insurance to see what is and isn't covered. There should be no unpleasant surprises. Here are a few extras you may want to consider including flood insurance. Most homeowners are unaware that their regular policies do not include flood insurance. Water backup protection is not the same as flood insurance. What do you think of that? An agent can assist you in making sense of all the information you're presented with. A hurricane policy. This insurance isn't for you if you don't live near a body of water. However, if you live near the coast, you may want to consider purchasing hurricane insurance. Your homeowner's insurance will not cover hurricane damage if you don't have wind insurance or a separate hurricane deductible. The coverage of earthquakes. Earthquake insurance may or may not be included in your homeowner's policy, depending on where you live in the country. If you live in an area prone to earthquakes, you may want to consider adding earthquake coverage to your policy. Additionally, even if you're a renter, you're still responsible for purchasing insurance. If your possessions are destroyed in a fire, flood, burglary, or some other disaster, you will be responsible for replacing them unless you have renter's insurance. In addition, many landlords and apartment complexes require renter's insurance as a condition of renting. When it comes to both homeowners and renters insurance, a knowledgeable independent insurance agent can help you navigate the complexities of both policies. Pro tip: it is possible to save money on insurance premiums if you have an adequate emergency fund in place. 5. Term life insurance. This is the most common form of insurance. What would happen if you died suddenly and left your spouse with no income? You don't want your grieving spouse to worry about how to keep food on the table and pay the mortgage after you've passed away. Your family would not have to worry about making ends meet, losing their home, or having to alter their college plans if you had a term life insurance policy worth 10 to 12 times your yearly income. Stop putting it off any longer. Term life insurance is something you should discuss with an independent insurance agent right away. It doesn't cost much, but the sense of security it provides is priceless. You should consider term life insurance when shopping for life insurance. In the long run, whole life insurance is nothing more than a gimmick. And if you're single and young, you might not think you need life insurance. If you owe a lot of money and don't have any savings, you might want to consider getting a small term life insurance policy. The cost of a life insurance policy that pays off your debt and covers your final expenses can be found fairly easily for a healthy 30-year-old. Purchasing life insurance may be unnecessary if you are single, have no debt, and can afford to pay for your own funeral expenses. There's nothing to worry about. However, consider the following. Term life insurance is more affordable the younger you are. And you'll never be younger than you are right now, so enjoy it while you can. In other words, if you think you'll need something in the future, buying it now will save you money over waiting 15 years. 6. Long-term disability insurance. As a result of a long-term illness or injury, long-term disability insurance protects you from losing your income. Isn't it possible that a long-term disability could put you out of a job? Thoughts? Just over 1 in 4 of today's 20-year-olds will become disabled before the age of 67, according to the Social Security Administration. Those are far too high of probabilities for you to ignore long-term care insurance. Your dreams of homeownership or even paying for your child's college may be shattered if you suffer a long-term disability. Don't risk being unprotected. Start with long-term disability insurance, which many employers now provide to their employees. Short-term disability insurance is also available when you're looking at your options, and it fills in income gaps caused by illness or injury that keeps you out of work for 3 to 6 months. That's a type of insurance you don't need, as long as you have a sufficient emergency fund. Take our quick coverage checkup to see if you need any additional insurance. 7. Umbrella policy. You can protect yourself and your assets with an umbrella policy if you need additional coverage beyond the limits of your homeowners or auto policies. In the event of a multiple vehicle collision, you will be responsible for the damages. There's a good chance your auto insurance won't cover the full cost of your medical care and property damage. There are many ways in which you could lose everything you've worked hard for if you're sued for the difference. A personal liability umbrella policy can shield you from a sticky situation like that. To be precise, Dave recommends an umbrella policy for anyone with a net worth of at least $500,000. Adding an umbrella policy to your insurance policy can increase your liability coverage from the standard $500,000 to $1.5 million for as little as $100 per year. If you're looking for an umbrella policy that's right for you and your family, contact an endorsed local provider. Finally, in this whole series, we discussed about 7 types of insurance you simply must have, including term life insurance, auto insurance, homeowners or renters insurance, health insurance, long-term disability insurance and umbrella policy, and much more. Hope you understand and found this series more informative and useful. Thanks for joining us. Hope you have a beautiful